What do you want to talk about today?
I really want to talk more about Bitcoin.
Okay.
I've got more questions.
I like more questions.
Yeah. I'm sure our viewers have more questions too.
You're going to quiz me?
If I knew more, that'd be a good place to start. Yeah.
Always trying to learn.
Why is Bitcoin so volatile?
Why is Bitcoin so volatile?
Up and down, up and down.
It definitely is. It is volatile. I would say it's very volatile with a low risk. The reason
with low risk?
Yes, the reason I say that is if you were, I think I mentioned this in the last episode, if you were to ever buy Bitcoin and hold it for, say, 2 years, you never would have lost money.
Mm-hmm.
While it does often swing up and down, it does trend up and to the right.
I'm curious, why is Bitcoin so volatile?
To define that a little further, I would say volatile, yes. Risky, no.
What do you mean, no? It dropped like 40K in, 6 months or something?
Over the long term, it's typically up and to the right. It does have large swings or relatively large swings, but I mean, if anything moved like that, if something goes up 40%, it's hard for people to not take profits. And it's also hard for people to not hop on the old bandwagon with FOMO. So I would say it is volatile. Volatile because speculation definitely dominates. If there's a large news headline or China's buying a bunch of it or Trump announced a strategic reserve, that stuff sends it up. And then if there's any negative news, it sends it down. It's very much tied to speculation and not intrinsic value.
Interesting.
So like lumber has intrinsic value. Bitcoin is very speculative in that fact. But you can convert it to, say, US dollars and spend it, but it's hard to place its value in other ways. Does that make any sense?
I mean,
it's a store of it is capital. It's a store of value. So, and it's largely driven by speculation. It's not like if you have 2 Bitcoin, it's equal to 400 acres or 6,000 pounds of potatoes. So it's like, what is it worth now and what will it ultimately be worth? And a lot of that comes from constrained supply because there's only ever going to be 21 million Bitcoin.
Do we know why? Why 21 million?
That's what is in the code. That's the way it was designed.
Got it.
That likely will never be altered.
I don't like that it's an odd number, but I like that it's divisible by 7.
Okay. Little AD, OCD. So there's a constrained supply. It's also been talked about. So far we've mined 19 million, but there's assumptions that roughly 3 to 4 million coins have been lost forever. Some of them have been
forgot about that.
Sent to burn addresses, like if somebody's trying to prove a point, or I don't know why I do that, but
loss of passwords,
people losing their seed phrases, wallets getting destroyed, things of that nature. Have you looked into hardware wallets at all yet?
A little. I googled them twice. They're like $150. Mm-hmm. A couple different brands.
Pretty solid one.
Yeah,
it's pretty good. A good one for that. They definitely make cheaper ones, but I'd suggest doing your research and like anything else. I wouldn't necessarily just buy based on price point, but I think I figured out what I want to go with, but I need to do more research yet. We'll divulge that later in a different episode.
But anyway, we're talking about volatility, how Bitcoin is subjective to speculation, sure. There's been a lot of speculation going on with the latest presidency. It did drive a new high.
It did.
What is the new high, all-time high for Bitcoin?
As of recording this, the all-time high on May 22nd was 112,000. That was according to what I found on Coinbase.
Yeah. Depending
on your brokerage, you might find a slight variation, but it was 112 flat.
Yeah, I got the notification myself. That's crazy. That's a lot.
Saw a lot of consolidation around 105,000. Yesterday or the day before, we pulled back to about 101 pretty sharply, but has since recovered, and I think we're sitting at about 104 today.
So do you think with all of this Trump-Musk drama that we're going to see a decrease?
It's hard to say. It seems like lately a lot of the price action has been related to politics and geopolitical things. A lot of the T word, not Trump, but
The
tariffs.
T word.
Yeah, it seems to be sending the price up and down, but it seems to mostly be correlated with the market. I know there's some times where it's been uncorrelated, but I think with the large institution investors and things of that nature, I think it's definitely still correlated to some extent. As the market dips, Bitcoin often dips as well.
So you think the most recent pullback was probably the T word?
It's hard to say. Just if you look at the chart at all, it's always up, down, up, down. So
Yeah.
like it's every time it hits new high, like eventually it's going to come back down a little bit. Like it's not just going to hit an all-time high and then just
Right.
like infinitely go up.
Yeah. And we haven't seen any like real major dips.
No, I mean, realistically, we went from 112 back down to 105 for a while, consolidating. And then there was a large sell down to 101 and it's back to 104. So not a dramatic swing by any means, but we're definitely seeing some consolidation hanging above 100,000 now. So hopefully 100,000 is a new floor. I say hopefully, but I wouldn't be upset if I stumbled into a whole bunch of money and it went down to like 20K and then I bought a bunch and then I went back to 105. But
Right. Yeah. I think we'd all be pretty excited about that.
I always used to get really excited when it would go up sharply, but the more I've researched it, the more I understand it, and the more my strategy is to buy it.
You want it to go down.
Yeah, like I almost get more excited when it goes down, to be honest, because I'd like to accumulate as much as possible. It's been my long-term savings account. I know at some point I'll have to sell to
Get what you want.
yeah, it'll be like down payment on a house and stuff. I don't think I'm to the point where I can borrow against it, or I don't think the
Right.
market is there yet. So at some point I will have to sell, but when it starts going up and up and up and up, it's just like I'm not going to be able to accumulate as much.
Yeah. Yeah. So you think the floor is about 100? I'd say that's fair. What do you think the high is going to be, or like end of 2025? What do you think come December we're going to be looking at?
I wouldn't be surprised if by the end of the year, I think, in my opinion, we'll see 125 yet this year.
Really?
I wouldn't say that it's going to close at 125 this year.
Right.
I wouldn't be surprised if it pulls back then. I can't say for sure what it'll close at, but I think we'll see 125 yet this year. If you think about it, we were at 112 and it's not a huge swing from 112 to
That's
125.
true. That's true. And we saw that in a matter of months.
I feel like it's another psychological number. Like obviously when we were encroaching on 100,000, that's just like a big mental
Yeah.
block for people. And everyone's like, well, when it gets to 100, I'm going to sell.
Yeah.
Like anything else. You get to those mental numbers.
Like
and
110 and 125, probably
Yeah,
150
150
after that. Yeah.
it gets to 50, 75. Like those are just very
Yeah.
subconscious numbers.
Yeah.
So I definitely think when it gets up to 125, I think we'll get, if not 124.5 or something.
Sure.
I think we'll see a little resistance there just because it's all time highs and it's kind of that mental number. You see a lot of people when it starts to take off, goes over 100, and people are like, wow, and they start to take it seriously. When you start to, they'll get on the bandwagon at 100, and then they're like, oh, my target will be 125. It's like I'll make 25% and I'll sell.
Right.
Wow. I used to think like that too, but now the more I've researched, the more I understand it. I'm a big buy it and hold it.
Right.
Don't sell it unless you have to.
And so you hinted at it earlier. You said your strategy for purchasing the Bitcoin, you get excited when it goes down. What is your strategy? Do you buy when it's low and sell when it's high? Or?
No. I've tried buying. I've tried selling. I've tried day trading. I've tried investing.
Yeah.
I've tried all kinds of stuff, and I've learned every strategy. I've tried most every strategy.
Okay.
When it comes to Bitcoin, retirement and portfolios and stocks and all that stuff is all different altogether. But when it comes to just Bitcoin,
Yeah.
the best thing you can do is buy it. Dollar cost average. If you're starting with a large savings, I would say like substantially more than a week or 2 weeks worth of pay. Like if, 5, 10, 15, 20 grand or whatever, I would definitely dollar cost average. I'd pick some kind of time frame, a month, 2 months, 3 months, 4 months. And I would religiously buy the same amount over the same duration until all that money's invested. Or if it's your earned income, I would pick a percentage of your earned income, and then I would just set up recurring purchases at the same duration that you get paid.
So that's what you mean by dollar cost average is
Yep.
it's just going to be whatever the
You pick your dollar
Bitcoin
amount.
price is divided by how many ever times you
You pick
purchase
your
it.
dollar amount you're looking to invest, and then you set up that frequency,
Yeah.
the same frequency and the same dollar amount. I see a lot of people, it starts to go up and they get excited and they think it's going to go, and then they buy a little extra, and
Right.
then it dips.
Yeah.
And it's like,
Didn't help you at all.
or it dips and then they buy because it went down, and then it goes down more.
Yeah. Yeah.
And then they're kind of weighted because now they don't have more money because they just kind of put a lump sum in.
Right.
I've found more times than not, people ask me all the time, like, what do you think? All my friends are kind of getting into it. Like, what do you think it's going to do? And I'm like, I don't know. I don't care. Like, ask me in 20 years. Like,
Sure.
Honestly. Because, like, I'm not speculating. They're like, do you think it's going to go under 100? Or, do you think it's going to blow past 112 again? And it's like, I'm unfazed either way at this point.
Right. And it's
I'm
long
just-
term for you.
Yep.
Still fun to watch.
It is. I do make guesses, but it doesn't affect my buying or selling
Yeah.
at this point. I will at some point sell. At this point in time with borrowing against, I don't think we have the infrastructure yet and I don't have like a substantial amount at this point.
Right.
I would classify to borrow against. I will sell at some point to fund other things in my life, important purchases. But other than that, I don't plan to sell. I won't sell any more than I have to.
Sure.
It's more of a long-term savings. Because if you're saving for a house, there's a little different frame of mind there. If you're saving for a house, say, then you want to put 5, 10, 15, 20% down based on average home prices now, which are high.
We want to talk about that.
Yeah. If you were going to save, we'll call it tens of thousands.
Okay.
If you just keep putting that in a savings account, essentially you're losing value because of inflation.
Yeah, we talked about
If it's
that.
going to take some kind of amount of time, I think it's better to put that longer term savings into something that's appreciating on average is 75% a year than losing 7% a year. So that's kind of where mine is. If it were to go up sharply or something, and I feel like I was 6 or 12 or maybe 18 months out from buying a place or property or building a house or whatever I end up doing,
Sure.
I would probably sell some or
Maybe
a
put it in
decent
something-
portion of what that down payment would be just to lock that in.
Sure. Or maybe put it in something a little less volatile.
Yeah. I would start to look into a little risk mitigation there.
Yeah. No, you said we're hoping to see 125 this year. Author Rich Dad Poor Dad.
Robert Kiyosaki.
Yep. He released a statement. What did he say he was projecting at the end of the year? I think
I didn't hear.
I'm pretty sure that was 125 as well. Actually,
It could be. I just formulated that all on my own. I'm sure many people have said it, but that's just kind of my prediction. We've seen some pullbacks and it even dipped back under 100 after it went over 100. But to put that in the frame of reference, we were at like 86,000. And then when Trump won the election, we bumped up over to like 104, I believe. And
I apologize. I actually got that wrong in this Yahoo Finance article. Kiyosaki further predicted that Bitcoin's value would climb to 250,000 within the year. So he's
of 2025.
Yeah, he's projecting double.
Yeah, I think I don't think it's out of the realm of possibility, but I don't think it's likely.
Yeah, that's extremely high.
Yeah, we do have. It's hard to wrap your mind around a little bit. If you think about it, I always compare it a lot to like the stock market.
It's not.
No, if you have a company and it's trading at say $100 a share,
Right.
you can buy 5, 10, 15, 20 shares, whatever it is. If it starts to go up and it all of a sudden is $1,000 a share, it's hard to buy 15 shares again.
Yeah.
With Bitcoin, it's so divisible on all these different brokerages. Like you can literally just buy $20 worth of it.
Right.
So like everyone buying and selling it is influencing the price. Or people that don't have a large sum of money, they're not buying several shares of something that are 1,000 per se.
Yeah.
On a speculative trade or whatever. So I think the consensus of everyone influences the price.
More people feeding the machine.
Yeah.
Got it.
Up and down.
Right.
But as it goes up, it's not any harder for someone to afford it,
Which is beautiful.
which makes it, and you'll see that a lot with stock prices as well. There's stock splits and reverse stock splits, and that just has to do with stock affordability. If a price of a stock goes up to $2,000. A lot of times they'll go through a split because it's more enticing for someone to buy it. Well, it's $200 stock than $2,000.
Right.
Especially if your portfolio is not really large. All of a sudden you're heavily invested in one stock if the stock's too expensive. So a lot of times they'll take a $1,000 stock and they'll go like a 10-way split, and then you'll have 10 stocks
Sure.
at 100. And the same goes for companies that aren't as healthy. And if you have a decent company, but haven't been doing the best, they'll go through a reverse stock split. If they're used to be 100 and now they're $5, they'll go the other way. They'll go a 10-way reverse split, and then all of a sudden it's worth 50 instead of 5. And it makes their stock price look better.
Good to know.
And also if it goes too low, then I forget what the price threshold is, but the New York Stock Exchange won't list them anymore. They don't list like penny stocks and stuff like that.
Sure.
Or like trip zero stocks. It's something to be leery of. Companies that are often doing reverse splits. Typically, they're not that healthy. There's a reason they keep bumping their stock price back to 50 and it goes back down to 5 over and over.
Good to know if you're managing your own portfolio.
Mm-hmm. Which I'm doing now.
Yeah. But you said you said you also have a pension, right?
Mm-hmm.
Yeah. Can you explain that to me? Because I just don't get it.
I never really. I mean, I guess everyone has a real
concept.
Yeah, everyone gets a real bird's eye view of it, but I've never really had a whole lot of experience with it until the career that I'm in now started over a little bit. And they have a pension where I'm at, which you don't really see very often anymore. So I did a little bit of, I understood it to begin with, but I had to do a little more research and through my specific pension plan, gather some information and then organize it into coherent thoughts. So I'm probably going to do a little note reading here.
Yeah, I'm going to pretend I know nothing about it at all.
Perfect. My pension plan, like most pension plans, are more or less they're a certain dollar amount multiplied by your years of service. And that's typically your monthly income. So how my retirement plan works.
Pension.
My retirement plan is actually kind of a blended plan. Mine is partly a 401 and partly a pension plan.
Okay.
So the 401 side of things, the way our contract's set up, there is no company match in our 401. That's what the pension plan is. The company's contributions go into the pension plan. The 401 side of things is more elective. Like I can put in either a traditional or a Roth, and I can put in, obviously up to the limits, I can contribute as much as I'd like.
Sure.
The pension side of things is based on years of service and the health of the pension fund. So what our fund classifies as a year of service is 1,800 working hours.
Interesting.
In a calendar year. If you were to put in more than that, you can actually earn more
than a year.
Oh, so if you put in, I'm not mental math, but if you put in like 2,000 hours, you get like roughly 1.2 years of service for that calendar year. Our applicable dollar factor is $59.75. So you take that number multiplied by your years of service credits, and that is your monthly income. So based on the age that I started at and when I start contributing to my pension plan and the amount of years of service I'll have, I always anticipate working more than 1,800 hours a year.
Sure.
I don't take a whole lot for vacations and stuff like that, and I work overtime. So I would anticipate more of a full work year, like I'll call it a full work year. Like 2,080 hours is on average good for rough math. That's 52 weeks times 40 hours a week is 2,080. I would probably put closer to that in with some time off and some overtime. I'll probably be close to that. And that actually works out at 1.15 service credits a year.
Nice.
And I would like to retire early, but I anticipate roughly 25 years of service by the time I retire.
Sure.
And 59.75 times 1.15 times 25 years is roughly 1717 a month.
Wow.
Be about $1,700 a month in pension.
That's a good chunk of change.
And then, yeah, and that is in perpetuity until I die. It's also structured. Pensions are also synonymous with annuities. So basically, I would get paid. If that was the case, I'd get paid roughly $1,700 a month forever. But there's different ways you can take the annuity. I think based on my situation, my age, my significant other's age,
Right.
how long we plan on working, and things like that. I can take less than that in exchange for when I die, my significant other will collect that pension until they die.
Oh, wow.
So I think that may end up being the route I go, but I'll do more calculations when I get closer to retirement.
Yeah, it's
I
so
still
far
have
out yet.
a few decades to go, but
Yeah.
but that also is an option. So it's basically an annuity, but that's roughly half of my retirement
Sure.
through my employer, or I'm union, so that's through our union.
Got it.
But outside of that, I have my own Roth. Outside of, well, that's actually through work as well. But I have a Roth. I have my pension. I've had other traditional 401s from previous employers that I now self-direct.
Manage, yeah.
But yeah, so that's roughly half of it. That's how our pension plan works.
Is that pretty standard across different kinds of pensions? Do you know?
Yeah, based on all the ones I've heard about, and when we talked about this in some of our meetings, and comparing to like the health of other funds, the people, that was a presentation put on by the people that manage our fund. That's pretty standard. Is you'll have like a fixed dollar amount,
Yeah.
and that will go up slowly over time. Like that'll
Inflation
account
and
for
stuff.
inflation and stuff like that. Also, the health of the fund.
So what do you mean by health of the pension?
So for the way our contract's laid out currently, we just started a new contract for 1 calendar year. For every hour I work, $11 goes into our pension fund.
Okay.
And that's for every person working like me. And that all goes into one giant pool of money. That money gets invested and it's managed by a company.
Where does it get invested? Do you know?
I don't.
Up to them.
Yeah, they choose that. I could find that out, but I don't know off the top of my head. It makes no difference to me.
Right. It's not like you're picking.
So basically, as far as health of the fund, you need to know how many people are contributing, how many people are drawing from it, and how the investments are doing.
Sure.
And ours has been performing very well for the last, I don't know how many years. We're quote unquote overfunded.
Oh, great.
So when we get to a certain threshold of overfunding, they'll bump that applicable dollar factor up. And that's what gets multiplied by the service years of service credits.
Interesting.
Right now it's 59.75. But if everyone's contributing, and partly why obviously you have projections, you know how many people are going to retire, currently how many people you have working. With how the investments have been going, I don't know what it has been invested in, but we've been doing really well. It's been like the longest bull market in I don't know how long. So that definitely helps. If you put $1 in, you get $1.50 back. The fund's doing really well.
Awesome. Do you think in your lifetime you might see them convert/invest in Bitcoin?
Oh, that's hard to say. So the particular union I'm in has actually been a merger of a lot of different local unions over the years.
Oh, really?
Yeah. So we've had like 3, 4, 5, or 6 slowly over time merge into ours.
I didn't even know that happened.
Yeah. So we have a little bit larger group of people. All the people that run it, the guys that typically go to union meetings, obviously are all older.
Sure.
But they've done such a really good job. Our health fund's the same way. Every time we get a raise, they maintain or increase how much goes into the health fund. So we're self-insured when it comes to health insurance.
Sure.
So we don't pay our money to an insurance company. We're self-insured. And the health of our fund there has just been doing great.
That's incredible.
They're always very looking. So how our contract comes due is we'll negotiate with contractors and they'll set a dollar amount and a duration of time. Typically on our end, we like a shorter duration of time because then we get to renegotiate and try and get another raise. But our last one was a 4-year duration and we're on year 2, I believe. Just started year 2. So we have X amount of dollars to play with, and then we'll have a meeting and they'll discuss of that raise,
Sure.
how much of that goes into your income, like taxable hourly income, how much of that goes into the pension, how much of that goes to health insurance, the building fund for educating new people coming in.
Wow.
And they've always been planning ahead for. If there's anything you could bet your life savings on, is healthcare never gets cheaper.
Oh, for sure.
It gets more expensive every year, and the older you get, it gets more expensive.
Mm-hmm.
So they've been very forward looking in that aspect, and we've always been overfunded or doing really well.
That's got to be awfully comforting.
It is. Our insurance is great. Also, for every hour I work, $11.29 goes into our health fund. And that obviously pays for our health insurance, goes into one big kitty. We also have what's called a dollar bank, and for every hour I work, a portion of the money goes in the dollar bank. And for health related, it's kind of like an HSA. It's not the same as an HSA.
Sure.
What if it's a qualified purchase? Like even like a certain weld helmet that has a respirator in it, they're several $1,000s. Like we can buy one of those and we get reimbursed for it, as long as you have sufficient funds in your dollar bank. So in a way, it's kind of like an HSA. So I have like a certain dollar bank, and then if I go to the doctor and I have a deductible or something, or an eligible purchase, I can get reimbursed for that. And all I have to do is go to work. Nice. And it accumulates money. So really, as far as health expenses, as long as it's qualified, and like most things are, I can't think of anything off the top of my head that isn't like, if I want a Botox, maybe that probably wouldn't be qualified, but health related stuff I get reimbursed for. So as far as that, I don't ever pay out of pocket. Well, I pay out of pocket, but I get reimbursed.
Yeah.
So typically healthcare type stuff doesn't really cost me anything.
That's incredible.
Which is nice.
Yeah.
That's the greatest value, I would say, in the position I'm in, and union benefits. And I've been union, I've been non-union, and I've been on both sides of the fence.
Sure.
I can definitely see both arguments, and that's for that's for a different episode altogether. But I'm very fortunate. The one that I'm in, we're doing very well, I think.
Nice.
We're very fortunate.
All right. I think it's time for a quick break. So we talked about one half of the retirement plan, the pension, which I knew nothing about. The other one, you talked about 401, but then you said traditional or Roth.
Yep.
Can you explain the differences, why someone should pick one over the other, or what even just the differences are?
Yeah. For those that don't know, a Roth means you get earned income from an employer. You pay taxes on it.
Yep.
And then you invest the money.
So I get $1, they tax it.
Correct.
75 cents gets invested.
Correct. That'll accumulate over time as it's invested. And then when you retire, you get to collect that money and you don't pay income tax on that.
Interesting.
Traditional is the inverse of that. If you have a traditional 401 you're contributing to,
sure,
you'll take pre-taxed money.
Dollar goes in.
Yep. So say it's $1, $1 goes in, you invest that in 10, 20, 30, 40 years, depending on what your runway looks like. You go to collect that money, you pay income tax in retirement on what you collect.
Got it. So then 75 cents comes out.
Yeah.
So basically you're trying to outrun.
There's some tax strategies involved with that. There's several different schools of thought. One is taxes typically since 1776 have been going up.
Oof.
But also part of it, people have different outlooks on retirement. Some people think they're going to buy a house and have a car and everything in their life's paid for, and they don't have the desire or see the need to make more or the same amount in retirement. Okay. So if you anticipate dropping down in tax brackets, perhaps a traditional might be the way to go.
Yeah.
If you anticipate making the same amount of money in retirement or more, depending on how you're saving in retirement and the performance of your investments, if you're going to be in a higher tax bracket, then a Roth would be more advantageous. It seems like things have transitioned more and more towards Roth. Most people recommend a Roth. I also recommend a Roth.
I've noticed that.
If there's anything you can count on, the government always wants their money. They're always going to do the math and figure it out. If you look up the contribution limits for a traditional 401 and a Roth is substantially lower.
Oh, is it?
With exceptions based on your age. If you're getting closer to retirement age, you can contribute more. But as of right now in 2025, a Roth contribution limit is $7,000 if you're under the age of 50.
Sure.
And a traditional 401k if you're under the age of 50 is $23,500. So it's roughly a third.
So what if your company provides a match, but it's to a traditional 401k? Can you still take that and put it in an IRA, or do you need to just invest in a separate IRA?
Typically, if you
I
have
mean Roth, excuse me.
yeah, if you have a company match and a 401, they're typically traditional,
Yep.
and they're typically managed by some company.
Right.
So there wouldn't necessarily be an IRA. I always, 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 always recommend contributing at least as much as they match. It's
Of course, yeah, free money.
free money. On top of that, I would recommend putting money in a Roth. I put money in a Roth. I used to put it all in traditional, and now I've kind of moved away from that a little bit, and I put it in Roth.
Sure.
Try and avoid some taxes later. There's a lot of different strategies with that also. Like some people will put in both. Like they'll have a blended amount. It depends how much you can put into. Like if you can only put in like $7,000 a year, then I would say probably a Roth. But if you could put in $30,000, then obviously you have to put it in both because you can't contribute into just one. But some people put like a couple grand in one and a couple grand in the other, and then you'll have two sources of income. One will be taxed now, one's taxed later. So it's another avenue. There's other intricacies with strategies too. Like if you have a large pullback in the market or in your investments, sometimes some people will cash out a traditional and they'll invest that in an IRA. Sorry, a Roth.
I did the same thing.
Yeah, and they'll invest in a Roth and pay the penalty. But you really have to run math calculations and numbers on that,
Right.
and figure out if you're going to save money in taxes or not.
Yeah, and you were explaining the depending on what tax bracket you may think you are in once you're retired.
Mm-hmm.
So you're saying, like, for instance, say somebody makes 50 grand now, but they're taking less than 50 grand in retirement. Is that where you're getting at?
Yep. So if your take home, for round numbers, say you're taking home 50 now, and then you retire planning on taking less than 50, it depends if that bumps you down a bracket. I think you'd have to be like at the poverty line.
I just picked a number, yeah.
Or say it's 100 or 150.
Sure.
Also, one thing to kind of take into consideration too is not always at the same rate as inflation, but salaries typically go up. The tax brackets aren't always the same. Like they haven't always been the same. Like if you make 3,000 to 5,000, like the increments in the brackets themselves change. Is depending on where you think you'll land for retirement income is what you're trying to project a bracket or guess a bracket that you're going to be in. Like when we retire, it might be like people that make up to 300, or it could be 400.
Right.
You don't know what the number is going to be yet.
Yeah. So sometimes it's easier to just take the hit with what you know.
Yeah, but you also can bank on taxes that are always going to just increase.
Yeah.
Especially with we have a deficit and it keeps growing, and
No
there's
way.
a ceiling, and then we just keep raising the ceiling. So that's eventually going to have to come due in some way, shape, or form.
Well, just keep raising it.
Yeah, taxes never really go down. They just add other taxes. A good strategy to keep in mind for wealth preservation is not only Bitcoin, but tax avoidance, we'll call it.
That's my next learning venture. So we talked about a couple of things here. We covered Bitcoin, what we think all-time high is going to be, why it's so volatile. And then we also talked retirements, pensions, 401ks, Roth IRAs, and the benefits to those. If you guys have any questions, please send them our way.
Yeah, if there's anything you want to learn, please let us know. I love to learn. I'll research and I'll answer it to the best of my ability. Is that a wrap?
Yeah, I guess so.